Good evening. I would like to call the 2021 public meeting of the Standing Committee on the Alberta Heritage Savings Trust Fund to order. My name is Garth Rosewell. I am the MLA for Vermilion Lloydminster Wainwright and Chair of the Standing Committee on the Alberta Heritage Savings Trust Fund. The committee is pleased to be holding the meeting on the Heritage Fund in the Edmonton Federal Building in Edmonton, Alberta. I would like to note for members that masks are to be worn in the committee room except when you are speaking, and members are also encouraged to leave an appropriate amount of physical distance around the table. I'd also like to note that the public galleries in the committee room are closed for this year. The Alberta Heritage Savings Trust Fund Act requires that the committee to hold a public meeting on the fund every year. The nonpartisan staff of the Legislative Assembly Office arrange and promote these public meetings, so I would like to thank all involved for making this year's meeting possible. The Alberta Heritage Savings Trust Fund is an important part of investing in a better Alberta. The fund earned a net income of $1.35 million for the year ended March 31st, 2021. A return of 16.1% was achieved during the fiscal year. This public meeting is an opportunity for Albertans to participate in a discussion about the status of the fund, what's in store for 2022, and how the fund will continue to provide a positive future for our province in the years to come. As well, the investment professionals hired to manage and get the best possible return for the fund are here to answer your questions. Now, I'd like to ask the members in the room here to introduce themselves. First, to my right.
Matt Jones, MLA, Calgary Southeast.
Grant Hunter, MLA for Tabor-Warner. Good to be here tonight.
Pat Rain, MLA, Lesser Slave Lake. Happy to be here and to serve.
Good evening. My name is David Egan. I'm the MLA for Edmonton Northwest.
And good evening, everyone. Christina Gray, MLA for Edmonton Millwoods.
Good evening. Warren Huffman, Committee Clerk.
And online we have MLA Tracy Allard for Grand Prairie. We have Peter Singh for Calgary East. We have Shannon Phillips for Lethbridge West. And I think that's got everybody. Yes. Okay. The committee's mandate is to review and approve the performance of the fund and report to the Legislative Assembly and Albertans. The President of the Treasury Board and Minister of Finance is ultimately responsible for the fund and its investments. The department looks after setting the fund's long-term strategy, developing its investment policies, and monitoring the performance of its investments. Joining us on the panel from the Alberta Treasury Board and Finance are Ms. Athana Mentzelopoulos, the Deputy Minister, Mr. Lo Epp, Assistant Deputy Minister, Treasury and Risk Management, Treasury and Risk Management Division, Ms. Brittany Jones, Senior Manager, Portfolio Analytics and Research, and Mr. Stephen Thompson, Executive Director, Capital Markets. The Alberta Investment Management Corporation, or Aimcode, is responsible for making and managing investments in stocks, bonds, and other investment instruments within the fund's portfolio. Joining us from Aimcode are Dale McMaster, the Chief Investment Officer, and Amit Prakash, Chief Investment Strategy Officer. Tonight's meeting is being broadcast live on Alberta Assembly TV and streamed in both audio and video formats on the Legislative Assembly website at assembly.ab.ca. We are also streaming live on the Legislative Assembly of Alberta YouTube, Facebook, and Twitter accounts. I'd like to encourage everyone to join the discussion during our live broadcast. You can ask questions via teleconference by calling 1-888-892-3255 using the conference code 489262. You can submit your questions via email, our web form on the committee's website at committee.admin@assembly.ab.ca or through Legislative Assembly Alberta social media on Facebook or Twitter using hashtag #ABHeritageFund. The contact information displayed on the bottom of the screen. We hope to respond to as many questions as time will allow during the question and answer segment of the meeting. which will immediately follow our panel presentations. The committee will alternate questions between those joining via teleconference and those asking questions via email and social media. Your input is important to us, and I encourage you to participate. Participants are asked to please keep their questions and comments respectful and relevant to tonight's topic, the Alberta Heritage Savings Trust Fund. Please note that this meeting is being recorded by Alberta Hansard. A transcript of this meeting will be available online on the Assembly website in due course. With that, let's take a look at the video on the Alberta Heritage Savings Trust Fund, followed by presentations from Alberta Treasury Board and Finance and Aimcode. So we'll go with the video.
As Alberta's main long-term savings fund, the Alberta Heritage Savings Trust Fund was established in 1976 to collect a portion of Alberta's non-renewable resource revenue for future generations. It is your fund for your future. The income produced by the fund supports government programs essential to Albertans, such as healthcare, education, and infrastructure. Over the years, the fund has helped develop parks, enhance libraries, and maintain Alberta forests, among other improvements to our quality of life. Endowment funds and research projects have also received financing since its inception. The President of the Treasury Board and Minister of Finance is responsible for the fund and its investments. The Ministry of Finance sets the long-term strategy, develops investment policy, and monitors investment performance. The Alberta Investment Management Corporation, or Aimco, invests the fund in a globally diversified portfolio across many asset classes, such as stocks, bonds, and real estate. The Standing Committee on the Alberta Heritage Savings Trust Fund, a committee of the Legislative Assembly consisting of government and opposition members, reviews the quarterly reports of the fund, approves the fund's annual report, and reports to the Legislative Assembly on whether the mission of the fund is being fulfilled. The committee also holds an annual meeting with Albertans on the fund's investment activities and performance. For more than 40 years, the fund has been improving the lives of Albertans and providing security for future generations. The Alberta Heritage Savings Trust Fund plays an important role in making Alberta better for today and tomorrow. Your fund, your future.
Okay, thank you very much. I would now like to invite Ms. Mensalopoulos and Mr. Epp with Alberta Treasury Board and Finance to present a financial update on the Heritage Fund.
Good evening, Mr. Chair, and thank you.
Oh, it's up there, yeah. Yeah.
Perfect, thank you. As the chair mentioned before, my name is Lowell Hunt. I'm the Assistant Deputy Minister in the Treasury and Risk Management Division, and it is our responsibility to provide advice to our minister on the Heritage Fund. In the next few minutes, I will provide some basic information about the Heritage Fund as well as review its investment performance. Slide 2. The mission of the Heritage Fund is to take savings from Alberta's non-renewable resources that have been saved and invest these funds for the current and future generations of Alberta, or of Albertans. Next slide, please. Next 2 slides, I guess. Right there. Thank you. The Alberta Heritage Savings Trust Fund Act is the legislation that governs how the fund is to be managed. Under the Act, the President of Treasury Board and Minister of Finance is responsible for managing and investing the fund. Next slide. And the Minister is supported as the chair has already mentioned, in managing and investing the fund by the Department of Treasury, Board and Finance, Aimcode, and the Standing Committee. The department is responsible for developing, evaluating, and eventually recommending investment policies for the fund to the minister. This includes making recommendations for the policies that will guide how the fund is invested and managed, including the allocation to different types of investments. In addition, the department is responsible for monitoring the investment performance of the fund. And finally, the department prepares annual and quarterly reports for the fund to provide information about the fund to the public and how the fund is performed. Aimco is responsible for managing the investments of the fund, including deciding how the fund's investment policy will be implemented. As the investment manager, Aimco is expected to actively manage the fund's investments in accordance with the investment policy to enhance its returns. Aimco determines where the fund is invested and when to buy or when to sell investments. Finally, the Heritage Fund Act establishes the Standing Committee to review the fund's quarterly reports and to approve annual reports. The committee is also charged with reviewing the fund and reporting annually to the legislature whether or not the fund is fulfilling its mandate. Next slide. Skip one there. Okay, well, Section 3 of the Heritage Fund Act requires that the fund be invested with the objective of maximizing the returns for the fund over the long term. This section also requires that the fund be managed prudently to avoid the risk of incurring losses. Next, there. 5 investment beliefs guide the development of investment policies for the fund. These beliefs are, first, that investing for the long term produces larger investment returns over time. In other words, patient long-term investing allows the fund to avoid selling when the market suffers losses and allows it to take advantages of some of those periods when prices are low. The asset mix, in other words, the allocation of investments among different classes of investments, has the largest impact on returns. That's the second belief. If the fund were exclusively invested in equity, its returns and risk would be much different than if it was invested only in fixed income securities. As an example of the asset mix and its impact, over the last 10 or so years, the fund has been invested more heavily in global investments, equity investments that is, instead of keeping all its equities in Canada. This mix produced larger returns for the fund as global investments generally outperform Canadian investments over that time period. The third belief is that risk should be managed on a portfolio basis. An individual investment may be risky, but when combined with other investments in a portfolio, investments such as that may actually reduce risk. Fourth, diversification is an important tool in managing risk and can improve risk-adjusted returns for the fund. And finally, active management, or if active buying and selling of investments at opportune times, can improve the returns or reduce portfolio risk, or both. Next slide. This slide shows the current target asset mix on the left and the actual asset mix at the end of the fiscal year on the right. The Heritage Fund's target allocation is to invest 47.5% of the fund in equities, 32.5% in inflation-sensitive investments, and 20% in fixed income. Inflation-sensitive investments are intended to protect the real value of the fund during inflationary period. And examples of these types of investments are real estate and investments in infrastructure such as power companies. These companies' revenues tend to go up with inflation. The allocation of investment among the different classes is Aimcode's responsibility as the investment manager. And you can see from the chart that the asset mix at the end of the fiscal year was fairly close to the long-term target allocations. There was a slight overweight to equities at 50.3% of investments and a small underweight to inflation-sensitive and fixed income investments. There's also a small investment in what we call opportunistic investments. These are investments that don't fit neatly into one of the other three categories, but they do allow Aimcode to make an unusual investment that doesn't fit the other categories, but they can make an attractive investment instead of being constrained by an overly restrictive investment policy. Opportunistic investments are limited to 5% of the total fund and are typically much lower than that. Next slide, please. The Heritage Fund's performance is evaluated by two targets, a real return target and a value-added target. Next slide, please. The real return target focuses on the longer-term performance of the fund relative to inflation and allows the asset mix to be evaluated. If the fund continually earns less than the target, the asset mix may not be sufficient to provide the returns that we seek. This target intentionally focuses on a longer period of time, recognizing that there will be periods when returns are good, but there will also be periods when returns are not so good. The fund is expected to earn a real return of 4.5% over a 5-year period, and it is calculated by adding 4.5% to the percentage change in the consumer price index over that 5-year period. Next slide. The value-added target measures whether or not the investment manager is adding sufficient value through actively managing the fund, again, over a period of time. The target is to earn a return that is 1% higher than the returns of a passive index. Passive index, or an example of a passive index would be the S&P TSX equity index, which measures the average return on various stocks within the stock market. Slide 13, please. Next slide. Next slide, please. So how did the fund do in 2021 and how has it done over the last 5 years? You can see some of the highlights on the screen. Over the last 5 years, the fund has earned a return of 7.4%. The fund was $17.8 billion in size at the end of the last fiscal year, March 31st, 21, and it earned a very strong return of 16.1% during last fiscal year. In dollar terms, the fund earned $1.4 billion in investment income during the year. $1.2 billion of these investments were transferred to the government to provide money to finance government programs and services, and $146 million was retained in the fund to protect the fund against the impact of inflation. Next slide. The primary reason for the fund's strong performance was its large investment in equities as measured by, or as shown by the performance of the MSCI World Equity Index. This index has increased tremendously over the last year and a half, from the lows seen near the start of the pandemic, rising 61.7% during the last 18 months. The end of last fiscal year was very near the low point of the world's equity markets, and you can see a V-shaped recovery of the equities markets has benefited the Heritage Fund greatly since that time. Next slide. How has the fund done versus its two performance targets over the last 5 years? Well, the fund earned 7.4% over the last 5 years. This return is 1.3% above the real return target of 6.5%. 6.1%, my mistake. However, the fund did not meet the active management target over the last 5 years, with the return from active management being 0.6% below what a passively managed portfolio would have earned. Slide 16, please. During the fiscal year, you can see that equity investments were the largest contributor to the fund's returns. Equity investments earned 37.9% during the year and had a positive return on active management of 5.3%. Fixed income had a pretty good year, particularly when compared to current interest rate levels. The low interest rate levels and falling interest rate levels during the year helped fixed income investments earn 4.8% during the year, which represents a return that is 2.5% greater than its benchmark. Inflation-sensitive investments had a negative return of 7.8% during the year, largely due to the falling value of some of the investments held, such as real estate, and these fell near the beginning of the pandemic and were adjusted throughout, the values were adjusted through the year. Active management resulted in returns being 8.7% below the passive benchmark for the year. And these lower returns were caused primarily by reduced valuations for the assets held and not by actually selling at low prices. In other words, many of those losses, most of those losses, were not realized. Next slide. In terms of investment income, equities provided the lion's share of total income, contributing slightly less than $1.2 billion in earnings. Fixed income investments provided $285 million, and despite the negative market value returns on inflation-sensitive investments, these investments contributed $18 million in investment income. Next slide. Slide 18 shows the returns on the various asset classes and subclasses held by the funds. On the right side of the chart, you can see that all types of equities had a very good year. Canadian, global, and private equities all had very strong returns, and value added in each of those segments by the investment manager, Aimcode, was positive and significantly positive. Inflation-sensitive investments, as said before, did not have a good year. You can see that real estate lost 9.3%, infrastructure assets lost 5.1%, and renewable resources earned negative 5.3% during the year. As mentioned earlier, the value added on inflation-sensitive assets was negative 8.6%. Slide 19. The fund has grown in most years since 2010, now totals $17.8 billion in size. Most of the losses seen in 2019-20 have been recovered by the fund. And now slide 20, please. As I think I've already mentioned, the fund contributed $1.2 billion based on earnings of $1.4 billion. Inflation proofing during the year, which is required by the Heritage Fund Act, resulted in $146 million being retained by the fund. Slide 21. Despite the fund having poor market value returns in 2019-20, total income was only $50 million higher this year than last year. The market value performance was caused performance loss was caused almost exclusively by unrealized losses, most of which have recovered in the past year. Slide 22. The mission statement that I started with states that the Heritage Fund is to be managed for the benefit of current and future Albertans. The fund has provided $42 billion to the government to pay for various priorities since transfers began in 1982. This money has been used to pay for healthcare, education, and many other things. This money certainly has benefited the current generation of today by transferring this $42 billion, and the $17.8 billion that remains will produce income for future generations. Thank you for your time as I have gone through the various facts and figures for the fund. In summary, the fund had a very good year and a very good 5 years, earning 7.4% over 5 years, 16.1% during the last year. Its market value is $17.8 billion, and it contributed $1.2 billion to the government's finances during 2021. Thank you, Mr. Chair. That ends my presentation.
Okay, thank you very much. I understand that this was not seen on the TV, but it has gone over Twitter for those that have access to that. So thank you for.
Legislative Assembly Twitter?
Yeah. And so thank you very much for your presentation. I'll now ask Mr. McMaster and Mr. Prakash to provide Aimcode's presentation regarding the fund.
Great, thanks, Mr. Chair. My comments will be brief, and then I believe we'll questions. I would like to say that on behalf of Aimcode, it's a privilege for me to be here today, along with my colleague, Amit Prakash. We take great pride in managing the Heritage Fund on behalf of all Albertans, and welcome questions about how the investments in the Alberta Heritage Fund are managed and how we're doing. Perhaps it's a cliche, but it's probably worth stating what a difference a year makes. When we met for this annual meeting last year, we were closing out a very challenging year from an investment perspective. And of course, from a public health standpoint as well, as all of us were impacted by COVID-19. The successful global rollout of vaccines has allowed economies to resume some degree of normality, and the financial markets have responded with enthusiasm, which has contributed to very strong absolute and relative returns for the Heritage Fund. The Heritage Fund returned 16.5% for the 1 year period ending September 30th. That's a full 6% above its benchmark return. Most asset classes within the portfolio are contributing to these positive results. Both public and private equities have been leaders. So this is great to see. This year we've also seen higher energy prices, which is always good news in Alberta. As we move into the end of the year, we expect additional good news on the valuation of the private assets in the Heritage portfolio. There are some headwinds and risks that we're watching very carefully, including rising inflation, supply chain disruptions, and labor shortages. And we expect the upcoming year to be more volatile for investors, and we will make the necessary tactical adjustments to the portfolio as necessary. From an investment perspective, we remain focused on managing a diversified portfolio of investments for the Heritage Fund, positioned to maximize risk-adjusted returns over the long term. Before we carry on this evening, I would like to thank our colleagues at Treasury, Board, and Finance for their continued collaboration, and to the committee members as well for the high level of interest and engagement for what we do at Aimco on behalf of Albertans. Thank you.
Okay. Mr. Prakash, did you have anything to present, or?
No, thank you.
No?
Okay.
Is there a video? No? No video? Okay, that's fine.
There's no hint tonight.
Yeah, okay. All right, no, that's fine. Okay, so thank you. And before I open the floor to your questions, I would like to remind everyone that we encourage Albertans to join the conversation and submit your questions for the committee or our panel of experts. Once again, you can ask questions via teleconference by calling 1-888-892-3255 using conference code 489262. You can also submit your questions via web form on committee's website via email at committee.admin@assembly.ab.ca or through the Legislative Assembly of Alberta social media on Facebook or Twitter using the hashtag AB Heritage Fund. As mentioned, your comments are important to us, and we will attempt to answer as many questions as possible during the meeting. I will now open the floor for questions from the phone. Operator, if you could put the next one through. And when you do call, if you could have your first and last name and where you're calling from.
There's nobody on the phone right now.
And there's no one on the phone right now. So we'll go to the emails.
Yeah.
Yeah.
I got one.
Okay, very good.
This one is from Samir from Calgary. He says, please comment on the abandonment liabilities associated with oil and gas credit investments such as Journey, Purity, Razor, etc. Has the trend of abandonments increased or decreased in the last 5 years? How much value did Aimco supported management proposal in the CalFrac restructuring provide to the Heritage Fund relative to the Wilkes Brother proposal? Please comment on Heritage Fund performance compared to peers, especially CPPIB and Ontario Teachers Pension Plan. Could the Heritage Fund change managers? There's a lot in there. Good luck.
Why don't we break it apart, because I don't even remember what the 10 questions were. But why don't you start with the first one?
The first one was around abandonment liabilities associated with oil and gas credit investments such as Journey, Purity, Razor. Has the trend of abandonments increased or decreased in the last 5 years? How much value did the Aimco supported management proposal in the CalFrac restructuring provide to the Heritage Fund relative to the Wilkes Brother proposal?
Can't really comment on the abandonment of wells. I just don't have the information on that at hand. CalFrac at this point represents, I believe, about 14 million out of a total fund of 130 billion. So it's more or less irrelevant to the overall total fund for the Heritage Fund. I guess that would represent about 1.5 or 2 million. CalFrac is up about 27% on the year, doing quite well, along with many other energy companies. So pretty pleased with the performance. What was the next question?
The next question was, please comment on Heritage Fund performance compared to peers such as the CPPIB, Ontario Teachers Pension Plan, and could the Heritage Fund change managers?
Yeah, good question. A fair question. We use a service called CEM that compares, global managers, not only the Canadian, what we call the Maple 8, but a global universe of like managers. And over the long run, we set our targets off what we see as top quartile results from those funds, and over long periods of time, tend to be in that top quartile of performance. And when you look at just the Maple 8, there's a lot of differences in how we manage the assets. Obviously, the asset mix is different from fund to fund. Their choice of relative weights of fixed income versus equities, the degree of illiquid assets they hold, their treatment of leverage in the fund, their risk appetite, their treatment of currency. All of these variables result in different returns. But saying all of that, if you look at performance annually over the last, say, 5-10 years, Aimco, on behalf of its total funds, the Heritage Fund is different from our pension funds, tends to be in the mix. Sometimes it's on top, sometimes it's at the lower end, but it tends to be in the mix. So over the last 10-year period, the Heritage Fund to September 30th earned 10%. I would guess that the Maple 8 are either side of that number. So I think we compare quite favorably to that.
And the last part of the question is probably for TBNF, and I think it's just asking, in theory, could the Heritage Fund manager be changed?
Yes, Aimcode could be replaced.
But we have no direction to do so.
Thank you. Okay, I have another question here from Scott Arnold from Edmonton. He asks, when will we finally, I'm sorry, I skipped a question. Scott Ritchie from Calgary asks, how will Aimcode divest from fossil fuels, I'm assuming fossil fuel related investments, as the world moves on and adapts to climate change?
We have no interest in divesting of energy hydrocarbons. The energy business, as many of you know, is one of Canada's leading industries. Our approach to ESG has extensive information on our website. We also publish a responsible investing annual report that outlines our approach. We are very much a voice over exit. So, we hold companies and encourage them to abide by the best standards of ESG, including things like worker safety, diversity on boards, better reporting on carbon exposures and CO2 emissions, and if encourage best practices there. We are not interested in divesting. There's a tremendous amount of capital that's going to have to be put to work in order to manage an energy transition, and that's something that I think investors around the world are going to be participating in. So there.
Thank you. On to the next question. And Scott Arnold from Edmonton asks, when will we finally have a saving program that cannot be dipped into? Should it not be illegal to take out even interest and growth until we hit, and he's suggesting $1 trillion, which could then be the source of future revenue?
It's Savannah here. I'll take a crack at that, and Lowell might want to help me. I guess essentially, as Lowell commented in his opening remarks, we take direction from the government, in particular from the Minister of Finance, in terms of the appropriate management of the Heritage Fund. And the choice that the current government makes is, as was described in Mr. Epps' presentation, which is to say that we do draw, as the questioner clearly understands, we do draw government revenue from the fund. There are different ways, again, as the questioner very appropriately points out, there's different ways to manage it, but that is the decision of the government in terms of the current management of the Heritage Fund.
I would add that is consistent with the decisions by previous governments as well.
Thank you very much. I have another question here from Patty O'Table. In the past, one of the explanations as to why Alberta's Heritage Savings Trust Fund is not at the level of Norway's fund is that Norway is a sovereign country and Alberta is a sub-national entity, implying that Alberta has less resources and tools available to grow its fund in this way. As Alberta does have authority over its natural resource revenues, the disposition of the fund, and the power to direct taxation, can you please identify what tools in particular Norway has as a national entity that Alberta lacks in relation to growing the fund?
This is Lowell here. Norway has complete control of its resources and how they are transported, whereas Alberta relies on other provinces, First Nations, and primarily the federal government to allow it to move Alberta's landlocked oil. That's a big difference.
Okay. I have another question here from Sally Mansauer. In response, my question is, what return did the fund generate this year?
The fund's return was 16.1% during the year.
we have anybody on the phones?
Gotcha. No.
Okay. I have another. James Sullivan. Aimco's recent responsible investment report stated that Aimco is developing a climate action plan, which will include an overarching goal of making real-world impact to reduce global greenhouse gas emissions. The report also states you intend to consult with clients on this plan in early 2022, but provides no additional details. How will Albertans be consulted in the development of this plan to ensure it reflects our priorities and values? Is there an expected timeline?
Dale, I'll start. Thank you, Mr. Chair. So, as Mr. Epp mentioned, our primary objective in managing the Heritage Fund is to maximize the expected returns over the long term. As part of that mandate, for each of the investments we make on behalf of the fund, we are focused on the expected returns, risk, and other characteristics. Climate risk is one of those risks which potentially would impact investments over the longer term. So we are focused as part of our mandate to also look at climate risk very closely. And just to repeat what Evan Siddall, our CEO, said, that we, as part of our mandate, we are not looking to divest from hydrocarbons. We believe there is an urgent opportunity as well as risk in climate action, or with climate-related impacts, and that's what we're focused on. As part of our planning on climate and responding to it, we are developing core principles and will be engaging with clients over the next couple of months to ensure that the principles, in conjunction with the objectives for the investment mandate that we have, that they are aligned and allow us, on behalf of the fund, to incorporate both the expected returns and risk, the opportunities and the risks as we develop and formalize that plan. We will do it in consultation and collaboration with clients over the next few months. Thank you.
Thank you.
Maybe I'll just, did I get my microphone? Yeah. I'll just give the number again in case some people didn't write it down. So the teleconference number is 1-888-892-3255, and using the conference code 489262. And you can submit your questions via web form on the committee's website, via email at committee.admin@assembly.ab.ca, through the Legislative Assembly Alberta social media on Facebook and Twitter using the hashtag AB Heritage Fund. And if we run out of questions here, just to prep the committee members, I'll maybe, if we get in a lull, I'll come to you guys to ask you if you've got a question, and then we'll go back and forth and give people time to call in or send an email. So we don't have anyone on the phone yet? There we go, yeah.
Thank you. Here's a question from Twitter. What steps has Aimco taken to increase trust that they are making sound decisions, considering the disastrous decisions in recent past, culminating in the recent loss of $2.1 billion?
Sure. As a result of our loss on the Volt strategy in 2020, our board undertook an external review that was performed by KPMG that resulted in 10 different recommendations that resulted in 31 specific objectives around all manner of risk management, including risk education, improving the risk culture, improving governance, transparency, all manner of risk management aspects. All of those recommendations and objectives will be achieved at the end of this year. We're 30 out of 31 objectives completed, and the last one will be completed by the end of December. So we took the opportunity to confront that loss, to improve our governance and risk management throughout the organization. I think that's been very successful.
Thank you. Alexandria Fisher asks, in 2020, Aimcode's net return of 2.5% was 5.5% below benchmark. Given this, what was the reason for the massive increase in C-suite AIP individual objectives bonuses from 1920 to 2021? This component of the CEO's compensation increased from $420,000 to $806,000.
So Aimco takes, sorry. Okay, I'll go. So Aimco takes a long-term view of performance and believes that a focus on short-term performance can distract from good investing. We will not comment on any individual's performance for the last year or any period, but I would direct the questioner to our annual report, where we provide readers with complete transparency regarding executive compensation in what we believe is one of the most comprehensive and transparent discussion and analysis of compensation in our industry. Secondly, it's also important that the incentive compensation considers achievement beyond investment performance. And relative to non-investment measures, Aimco's executives successfully executed against a number of corporate initiatives that have both ensured that there was no disruption to our operations as a result of the pandemic, and as well as also benefiting the organization and Aimco's clients over the course of 2020.
Thank you. Next question is from Neil Gray from Edmonton. During the presentation, Aimco mentioned current concerns around inflation. Given that the trust fund's assets are global, is he suggesting that the threat of inflation is currently global? Can he expand on what he means about the risk of inflation, specifically where Aimco sees inflation as a risk, why they believe inflation will rise, and how they see that interacting with their investment portfolio and the returns it provides to the Heritage Savings Trust Fund and the province?
Sure, I can take a stab at that. I think most people are aware that inflation has crept up. In fact, the most recent release on US CPI had it above 6%, and I think inflation in Canada is running over 4% at this point, after many years of benign inflation data. There's reasons for this. Partly it's a great amount of stimulus that's been provided on the part of governments, both fiscally and through monetary policy, to stimulate the economies coming out of the pandemic recession, including government support that put funds into individuals' hands, and we've seen energy prices rocket forward. About 30% of the CPI, headline CPI number that we're seeing is related to a very sharp rebound in energy, which again is related to a pickup in demand brought about by all of that stimulus. We're seeing a shortage of labor, which is driving wages higher, in part, again, because many of the workers that were laid off or impacted by the pandemic have not returned. Some were still collecting government funds. In the US, we had upwards of 10 million. That's been reduced to 4 million, but there's still significant folks that have not returned to the workforce, to the labor force, and many of them will not. It seems that given the sharp rise in asset prices and housing prices and government support has had certain individuals rethink coming back to the labor force, and that's driving wages higher. So we have shortages of materials, shortages of labor, a rise in energy prices that is driving inflation higher. Central banks are currently taking the view that this is transitory. And at this point, we would tend to agree with that, in part by looking at what the bond yield curve is telling us. And that is that 10-year rates have moved upwards to a high of about 1.75%, while the short end of the curve has been most impacted by the rise in inflation. So what does that tell us? It seems like, if you believe in an efficient market, the market is saying that this is also transitory, and that those forces that created deflationary impacts like technology, demographics, an aging population, productivity increases will come to bear again once we get through this sharp demand period coming out of the pandemic. We are watching this very carefully for signs that inflation becomes more embedded and creates a wage price spiral, which would not be good for markets or economies, we think. And so we'll watch that very carefully. The good news is central banks are actively changing their positions and are about to begin tapering and withdrawing stimulus, probably sooner than they had been saying 6 months or a year ago. So this is probably a positive step. I don't think we need rates this low, certainly negative real rates, right? With inflation at 4% in Canada, 6% in the US, we need to try and normalize rates. And I think that would be a good thing for markets.
Thank you very much. The next question comes from Twitter. How much money is invested in the TC Energy Coastal Link project? When was the money invested? And comment on how much due diligence was done, considering that major stakeholders, i.e. hereditary chiefs, were not consulted.
We have approximately $650 million approved for the Coastal GasLink project. I think this is a terrific project, unusual in that it has such widespread support, both from community, government, and First Nations. This investment was made in 2019 and has had some minor delays, but is a very promising investment that we're very proud to make. Consists of long-term cost of service contracts with very creditworthy counterparties. It's a critical piece of Canadian infrastructure we're very proud to be part of. There's no direct commodity exposure, volume, or merchant exposure. Reputable operator and TC Energy adds portfolio diversification on behalf of the Heritage Fund. No hedging cost, here it is in Canada. The portfolio on infrastructure was a little underweight Canada, so we're pleased to see that. From an ESG standpoint, is wonderful because liquefied natural gas can be shipped offshore to places like China and India who are dependent on coal-fired generation. 35% of global emissions are coming from China, largely from coal-fired electric generators. We're very pleased to be part of replacing that with gas. So that aligns very well with our ESG credit. And we're very happy to be participating with First Nations. There's over 20 First Nations groups all on the path of the pipeline who have signed on and are working on the pipeline and the project, providing jobs. So this is an example of a project that we're proud to be part of that satisfies, ticks a lot of boxes for us.
Thank you. The next question is from Tony Odenbach from Red Deer. Some of the return is reinvested in the fund to offset inflation. With higher inflation rates, will this change the overall investment strategy? It was disappointing to hear that the fund managers didn't meet their active management targets.
Sorry, is that one for me? Could you repeat the question?
Yes. Tony's asking about some of the returns are reinvested for inflation protection. With higher inflation, will any policies around this change? And then he commented on not reaching the active management targets?
Yeah, you're fair enough. Well, I'll say a couple of things. Let's talk about the targets. First of all, I was looking at the return recently for the Heritage Fund at 16.1%, I think it was. You had to go back to 2009, 2010 to see a return that high. That was 17.8% back in 2009-11. So almost 12 years. So a very high return. Of those 12 years, Aimcode's outperformed the performance benchmark 9 out of 12 years. So that's also good to see. I have more recent information than this report, the annual report that was presented by Finance. We have, it was 8 months ago. We have September 30 numbers, and the 10-year return for the Heritage Fund is 10%. Annualized. So every year for the last 10 years, 10%. Aimcode's added 53 basis points over the benchmark on that basis. So that's roughly, call it $100 million a year that Aimcode's adding over the benchmark. And that 10% return represents about $17 billion of total return. So almost as large as the fund has been earned in returns over the last 10 years. Any short period of time, even sometimes 5 years, we're going to show underperformance. I can tell you now, at September 30th, we're above the 5-year benchmark by 24 basis points, 10 years by 53, and by year end will be even more. This has been a V-shaped recovery in markets that has led to a sharp, a high return, that 16% return. And some of the illiquid assets have led because they're only valued quarterly. And so we've continued to see those get marked higher through the year, and we will see that again at the end of the year. So my news for you is Aimco is quickly climbing back on the value add trend again towards higher value add, and we expect to be very close to those stretch targets very soon.
Thank you. Tammy Giroux asks, the money that came out of the fund was used for what purpose? Also, whose fund is it, ours or the government's?
You're unmuted. Still unmuted. Okay. Sorry. Well, the fund is definitely Albertans. It's managed on behalf of Albertans by the government. And sorry, I forgot the first half of the question.
What's the money being used for?
Well, no, money goes into the government's general revenue fund, and like taxes and other revenues of the government, it gets used for a variety of purposes. We don't actually track every dollar and how it gets spent. That would not be possible, quite frankly.
But if you imagine some of the things that governments pay for, healthcare, education, those are the top two. So it's reasonable to conclude that certainly the revenue derived from the Heritage Fund has had a contribution to helping to provide healthcare and education, amongst others.
Okay, thank you. That's it for those questions yet. You can still send them in. MLA Grant Hunter has caught my eye and he's got some questions. You next.
Thank you, Mr. Chair. I have just two questions. The 2020-21 returns showed 16.1% during very tumultuous times. I'm actually very interested in what was your strategy? How did you prepare for that? If you didn't, I was just surprised to see it. Was it because of that V curve that you were able to realize those returns? I mean, I guess after the 2008 housing crash, you also saw an increased 17%, as you said. So is that indicative of just a V curve that would affect that, or how did you get that 16%? And are you going to be applying that same thing to a higher than average inflationary time this year and next year?
Okay, good question. Let me try and address the first part of that. we're very patient investors. We invest for the long term. And when we get market dislocation, where you have panic selling and prices move away from true value, creates opportunities for long-term investors. So part of that is our actions. But I would say that in this case, with March 2020, the recovery was so quick. If you recall, March was dreadful. The central banks took a page out of the credit crisis playbook to immediately respond, and the stock market started going up almost immediately. So active investors in the public markets have very little time, to act in that space of time. But what happened, of course, is that we hold good quality investments, and they were marked down in this dislocation, and they came back, and that was part of it. The illiquid assets, we hold. So if you consider infrastructure and real estate, let's talk about real estate for a minute. Real estate in the pandemic was really a case of you either lucked out or you didn't. If you own malls that closed, well, you got valuation adjustments. We own an airport in London City. Well, it closed. It's closed for over a year. There's not much you can do about that. London City, as many of you may know, is completely at capacity in terms of air travel. It was before, great investment. Air travel is growing 5% a year globally going into this, and then this thing shuts down, right? And it caters to commercial travel. So a lot of it was, what you owned, and now with economies opening up, of course, these assets are coming back and the valuations will increase. Other things did quite well for us. If you take real estate again, if you were in industrial property, say logistics, which cater to online activities, right? Buying online, if you're moving from retail bricks and mortar to online, logistics centers have absolutely exploded. And we're overweight that sector, and it's doing very, very well for us. And you'll see that in the returns coming into December. As always, one needs a diversified portfolio. So if we talk about infrastructure for a minute, I mentioned London City. That got hurt a little bit, probably down 20% from 2019. On the other hand, renewables, wind and solar have absolutely exploded. And you may have seen the press release that came out recently around our Spanish renewables platform, Eolia, which we purchased for $600 million in 2019. Well, we're on pace to sell that for close to $1.8 billion, nearly a three-bagger on what's supposed to be a 7, 8, 9% return type of investment. And it just goes to show you the demand for renewable assets is so great that it's separated itself from a reasonable valuation. And we had to sell this because it was too risky to hold at its future potential return at that valuation. So that was a tremendous lift for the portfolio, obviously, that again, you'll see in the year-end return. So long story short, to say that yes, the V-shaped recovery helped our assets come back, and what we lost in 2020 is being recovered in full in 2021 and then some.
And if I may just add one more comment to Mr. McMaster's comments, a lot of the benefit that we've seen in the Heritage Fund isn't something necessarily that was done to it last year or in March of last year. The design of the design and the policy mix of the fund, its allocation to equities, to inflation-sensitive assets, which creates a diversified pool. The resiliency that adds to a fund such as that is we see in the benefit as the markets turn around in a hurry, and how the fund has benefited from the quick turnaround. Thank you.
It's actually a different question. If you want to go to someone else, it's fine. I can ask another question afterwards.
Okay, we'll go to MLA Christina Gray.
Thank you very much, Mr. Chair, and thank you to everyone who is presenting this evening, and thank you to all the Albertans who have submitted questions. My question at this public meeting is around the topic of the fact that government or Treasury Board retains the ability to direct individual investment decisions at Aimco. And we've certainly heard the language of trust coming from some of those Albertans who've asked questions today. This is an issue that's been of public attention in the past 2 years, and at our last meeting, new CEO, Mr. Siddle, did acknowledge that there is the ability of government to direct investments, and that he believes predecessors have recommended that might be a perception problem for Aimco. And so my question to Treasury Board and Finance, as we're nearing the end of the fall legislative session, is if the department, if the minister is considering any legislation to remove this power from Treasury Board and Finance, would you be able to update the public if it continues to be the position of the minister that the government should retain the ability to direct individual investment decisions at Aimco?
Thanks. It's Athana here. I'll take a stab at answering that. Thank you for the question. I think that the question refers to Section 19, which has not been utilized. There was a policy in place called the Alberta Growth Fund, but the government rescinded that. In terms of the specific question about whether legislation is being contemplated, I can't speak to that because I believe that questions about legislation are generally held to be confidence. And I think that if that was going to be considered, it would be coming before the Legislative Assembly, and at that point it would be public.
Thank you. Nope, thank you.
MLA Peter Singh.
Thank you, Mr. Chair. And let me begin by expressing my appreciation to the officers of AMCO, as well as the representative of the Treasury Board and Finance. Thank you for being here with us today in this public meeting here. And my question is on slide 13 of the Treasury Board and Finance presentation. It states that the fund experienced 16.1 return during 2020-21. How does that compare to the general market? And how does that compare to the rolling average over the last 20 years? And how sustainable is the rate of return? Thank you, Mr. Chair.
I'll take a stab at that. You know what, I don't have that number in front of me, the benchmark return. I can tell you that to the end of September, the total return for the fund for 1 year is 16.5% versus a benchmark of 10%. So outperforming by 6%. So that gives you some idea. It's a different period, but it gives you a sense. The total return is quite high, isn't it? I mean, I think I highlighted earlier, you have to go back to 2009-10 when the fund, the Heritage Fund returned 17.8%, you know, for a total return of that magnitude. That's not the sort of return I would expect next year in terms of total return for a few reasons. Number one, interest rates are very low, 1.5%. So fixed income is not going to earn much. There's been a lot of euphoria in the markets, which have driven valuations higher, and we're taking advantage of that. So I'd expect a more muted return. Our long-term forecasted returns are in the 6 to 8% for a balanced fund. You know, for the next 10 years, that would be our forecast.
Thank you for answering. I have one more question here. The overall value of the AHSTF has remained relatively stagnant over a number of years due to the policy decisions that have been made to hourly inflation-proof the fund. With the rates of return as the 16% range here, are policy options being considered to increase the principal value of the fund beyond inflation proofing, such as allowing the greater than anticipated returns to the fund here? Thank you.
There are many assumptions you have to make if you want to compare what returns and values would have been had the money been retained in the fund. And quite frankly, we haven't done such a calculation. In addition, there's a cost to taking that income away from the government's ability to spend. So lots of people talk about what could have been if we maintained the fund or maintained that money in the fund, but very few people talk about what Albertans would have had to give up to accommodate that growth.
Thank you for answering my questions, and I really appreciate you for taking this time to be here. And thank you, Mr. Chair.
Next question comes from MLA David Egan.
Thank you, Mr. Chair, and thanks to everyone who's tuned in tonight for the annual general meeting, a public meeting for the Heritage Trust Funds. And so I have a two-part question. I know that organizations are always going through change, and we did see the new CEO from Aimco in an op-ed last month, making it very clear that Aimco had a lot of work to do in order to repair relationships with the public, and noted being honest and transparent is job number one. So I'm just curious to ask, first part of my question to Aimco, what sorts of actions are you taking to meet this standard and to right the ship, so to speak?
We've taken, as an organization, a range of actions to improve and repair our relationship with our clients, and the core to that is to evolving Aimco as a more client-centric organization from an organizational perspective, from a consultative perspective, and from the general level of client service that we provide to our clients. From an organizational perspective, some of the changes we've made will strengthen our interactions with clients. It'll improve and enhance the quality of the conversations we have with clients. And lastly, improve the analytical and research support and capabilities that we are building to further support our clients. Secondly, with many of our clients, we have also formally started to consult on a variety of topics, including product descriptions, including cost recovery models, and the like, again, with the view to providing greater transparency and having more formal ways that we can interact. And then lastly, we've also more formally set up forums whereby both at a senior, as a strategic level, clients engage with us, both where we can share priorities, solicit input, and have open and honest two-way conversations. And likewise, we're also doing that at a working level, at a more granular level, in order to both improve communications, but more fundamentally build trust with our clients. We believe these steps have been well received with our clients, and we will continue to do so over the next little while. Thank you.
Thank you very much. And that sounds like a very engaging process, and I congratulate you for that. The second part of my question is to Treasury Board and Finance then. We heard what Aimco has been doing to try to develop more positive relationships. I would just like to know what Treasury Board and Finance is doing to work through some of the bumpy processes that we've witnessed here in the last number of months, right? For example, with the teachers and the thing that went on with their pensions. And so just curious to know if Treasury Board and Finance is going through a similar process to improve their relationship with their clients and the public.
Well, I believe that we're here tonight to discuss the Heritage Fund, and I'm pretty proud to say that in terms of the Heritage Fund, we have an incredibly high degree of transparency. We appear before the committee several times a year. We're here this evening to appear before the public, and I think we have demonstrated our commitment to transparency. We appreciate a similar level of transparency from Aimco around their own operations. I think that's the purpose of the meeting tonight. So I'm only really comfortable speaking in terms of the purpose, which is the Heritage Fund tonight.
Yes, well, of course, Heritage Fund. Oh. The Heritage Fund is integral to your response to the public and to how you're part of your responsibility to manage that. So, yeah, thank you.
Thank you. We have some more emails.
Yeah, a very quick one here from Tammy. She asks, how do we contribute to the fund for TBNF?
That's a great question. I don't have a great answer because nobody's ever asked before. I'm sure we can find a way if somebody wants to contribute to the fund. That won't be difficult. But to be honest, we honestly haven't seen that question ever before.
There are no current contributions either, right?
No, there are no
contributors.
No contributions except for extraordinary ones. I think the last one was in 2008.
Yeah, perhaps you could just quickly comment on how the fund was historically funded and how that was changed.
So the fund was historically funded by taking a portion of all revenues from non-renewable resources. Initially, this was, I think, 100%? No, it was a third, right? I think, well, anyways, we took, let's say, 30% of all non-renewable natural resource revenues and put them in the fund. Starting in 1987 or 82, that amount was cut to 15%. And then in 1987, the contributions, the regular contributions were eliminated. Since that time, there's been the inflation proofing, which started in 2005 after the government paid down Alberta's outstanding debt. And there have been occasional ad hoc deposits into the Heritage Fund. These are all listed in the annual report.
Thank you very much. Next question is from Alexandria Fisher. Unlike many peers, Aimcode doesn't disclose its external managers. When asked, Aimco said they couldn't share names due to confidentiality. What specifically prohibits sharing this information? What actions must occur to disclose and match peer transparency best practices?
To be perfectly honest, I'm not sure. We offer complete transparency to our clients, of course, and their consultants. You know, we have a lot of material on our website and in our annual report as well. I'm not sure the level of disclosure on external managers, though, or even what our policy is to the general public. To be perfectly honest.
Okay, thank you. An emailed question from Patty O'Table. How large would the fund have to be to generate sufficient revenue returns to general revenue to return Alberta to surplus budgets without raising taxes or cutting spending, excepting COVID expenditures?
Well, again, we've never done those sorts of calculations. We earned over the last few years about an average of 1.2 billion. The deficit this year is somewhere in the range of 7 billion, I believe. And so we would need to earn, or we'd need to have about 4 times as much, the size of the fund would need to be about 4 times its current size to produce that much income.
for a balanced budget.
Thank you very much. Neil Gray from Edmonton asks, is there anything in the current asset mix that might be considered offensive to or not in line with Albertans' ethics, values, and standards? Is Aimcode confident that nothing in the asset mix would be considered inappropriate were those assets brought to light as being owned or operated by or for the people of Alberta? What sorts of ethical or moral checks does Aimcode test assets against? Do those tests get revisited during an asset's lifetime holding?
Sure. Maybe I'll start that one, Ahmed, and then you can weigh in. Almost all of our investments at this point go through a due diligence and ESG due diligence process. Of course, there's a deep due diligence on looking at the merits of the investments, risk, legal, compliance, but there's also a specific ESG due diligence checklist. Our responsible investing group is responsible for carrying that out. And they rate all of the investments on a red, yellow, green scale. We abide by best practices and doing business the right way. And, where we have, certain areas of focus in responsible investing. I mentioned earlier, worker safety, diversity on boards, proxy voting approaches. And where we see a failure on part of one of our portfolio companies, we will engage with that company and its board as well to elicit change. Amit, you want to comment further?
Yeah, I'll just add to that. Thank you, Dale. We are also very proud of our transparency in this space, consistent with the other areas. So our responsible investing report, our TCFD report, how we vote our proxies, all of that's available on our website. And again, the public has full transparency into our positioning in any of those areas.
And we do have a restricted list as well, which includes your tobacco and weapons of mass destruction, which are no-go zones for us.
Okay, thank you very much. MLA Pat Rain has a question.
Thank you, Mr. Chair, and I'd like to thank all Albertans for participating this evening, and also thank you to everybody participating on live screen. My question has to do with the last global market contraction was in 2008 during the subprime mortgage crisis. And as most of us know, the economy also often works in a cyclical fashion. And I wanted to know if you guys could comment on how now we're going through a similar situation with COVID, what your thoughts are on positioning the Heritage Fund in order to try to maximize returns coming out of this type of a downturn.
Sure, good question. One of the things we've done is, we positioned the fund tactically, overweight equities through much of the past year, and underweight fixed income, underweight bonds. And the rationale for that was we just felt that with the amount of fiscal and monetary support that was being put to work, that equities would have a significant tailwind, which they have. On the other hand, fixed income to us has very little merit in anyone's portfolio beyond risk management and liquidity, which are important considerations. And for all of our clients, that still represents a significant piece of the asset mix. But in terms of return, we really haven't seen such a long period of negative real rates, and in many parts of the world, still negative nominal rates, some 13 trillion, I believe, still trading below zero. So rates are very low, don't cover off inflation. And if rates start to move higher, you'll see negative returns there. So very unappealing from a long-term investor point of view. So, many of our clients, and including our folks at Treasury Board and Finance, have shifted the portfolio towards illiquid assets, private debt, mortgages, infrastructure, private equity, real estate, which has been partly responsible for the tremendous returns over the last 10 years because Treasury Board was astute in moving, early in that regard. Tactically, underweight fixed income, overweight equities, we've trimmed that recently, in part because we think valuations are somewhat stretched in the equity market. We are concerned about rising inflation and the potential for higher rates to potentially create more volatility in equity. So we're being cautious there. In credit, we're very cautious as well. Corporate credit spreads are very, very tight. So the extra yield premium you would buy in, say, buying a corporate bond versus a government bond is very narrow, all-time tight, offers very little protection over government bonds. So again, we're very cautious there. We have moved more assets into private debt where we think there's better risk-adjusted returns. In equities, as well as taking our overweight down within the portfolio, we've reduced what we call beta. In other words, we positioned the equity portfolio to be less sensitive to downward movements in prices should it happen. So we're being cautious there. So I would say generally across the portfolio, we're playing a bit of defense. And in terms of our risk budget, we're using about 66%. So we have plenty of room to take more active risk in the portfolio should we get some kind of correction or dislocation. We are still seeing attractive opportunities in the liquid asset classes, in part due to the rich partnerships we have around the world, because valuations are stretched. I talked about Eolia earlier. So we use our partnerships and contacts to bring new investments in the portfolio that meet our standards, and we're continuing to find those despite difficult conditions. So in a nutshell, a little more cautious going forward in the next 6 months here.
Okay, go. My schedule of questions right now is MLA Christina Gray, Tracy Allard, and then Grant Hunter, unless you have another one after that in between. No. Okay, go ahead. MLA Christina Gray.
My question is, we're seeing right now the BC floods playing out, and there have been a number of devastating weather events in the recent past. And let me just say that my heart goes out to those who are impacted by the floods right now. I know there's a lot of people who are still working on that situation. But it brings to mind for me disaster preparedness, and my question is to Aimco around your own disaster preparedness system, your system redundancies as an organization, what you do to prepare for catastrophic events like this, or even something like cyber attacks or what have you. As an organization, how do you prepare?
Sure. According to best practices, we have, what we consider state-of-the-art protections against, cybersecurity attacks, business continuity plans, and contingency plans around that again, are reviewed annually through our external consultants, which make sure that we're keeping up to speed and have redundancies and contingency plans for all manner of potential catastrophes. So obviously, cybersecurity is top of the list these days in terms of risk, and we use external consultants to test. We have a thorough education program, a lot of penetration around cybersecurity is around phishing. So we run regular tests. There's educational programs. We have external consultants come in and try and break through our security within our IT, and it's an ongoing battle. No question, you can't rest for a moment because the hackers are always trying to stay one step ahead. But it's absolutely at the top of the list in terms of risk we have to manage, and it's at the top of the list, I know, for our audit committee, which takes great interest, and our enterprise risk committee as well, which takes great interest in that.
No, I appreciate that. And your answer focused very much on the cyber attacks. I guess I'm also wondering about physical redundancy in case there is power grid outages or infrastructure disruptions in your current headquarters, that type of thing as well, if you wouldn't mind speaking to that.
Yeah, all, go ahead, Amit.
I was going to say we have a full BCP plan in place which builds in redundancies, both from a physical structure that we have and certainly our computer systems that allows us, that would allow us in event of us being unable to access our office infrastructure, whether virtually as in the current mode, or hopefully some near future when we are physically back in the office. So there are levels of redundancy both on the systems and infrastructure that we have in place.
Okay, thank you. MLA Tracy Allard.
Thank you, Chair. I appreciate everyone's time here this evening, and I hope that this is helpful to those that have joined us online. I just wanted to ask some contextual questions first, and then I have a more specific question regarding COVID and the investment pattern within COVID. My contextual question arises from my short time as an MLA. I often get constituents coming in who believe that the Heritage Savings Trust Fund is gone, which was really surprising to me. And so I think it would be helpful for some of those members of my constituency and possibly right across the province to understand when the fund was started, and has Aimco always been the manager of the fund? And further to that, several comments were made about how Aimco's a long-term investor and has long-term strategies. And for some people that doesn't really necessarily resonate. Can you tell me what your benchmarking, is it lower than other fund managers? Is it higher? Is it aggressive? And who sets it? Is it the Minister of Finance? And then I have one other question about COVID after.
So I'll start. I don't know if I can answer all of them, but I will start. The Heritage Fund was set up by the government of Peter Lougheed in 1976, and it has remained since then. It's currently near the peak of the amount of money it has invested. So I think the peak is around 18.5 billion, and right now it's 17.8 billion. Could you repeat the other questions?
Who sets the benchmark?
Oh, who sets the benchmark? The benchmark is set primarily by the department and the minister when we set an investment policy.
And has it always been managed by Aimco?
Thank you. It has been managed by Aimco since 2008, when Aimco was created. Prior to that, Aimco was a part of the Department of Finance and whatever it was called throughout the years. So it was managed internally in 2008. Well, in 2007, legislation was passed to form the Alberta Investment Management Corporation. So it's been the same management team, well, not team, but same structure throughout.
Follow-up?
Yes, thank you very much. I think that context is really helpful for constituents who find it a little bit confusing, some of those transitions. And I'm going to ask a question now about COVID. What has come up in conversations often is around access to pharmaceutical, and particularly domestic pharmaceutical supply with respect to the COVID vaccine. And I'm just wondering, in the last year or two, has there been discussion at Aimco about investing in pharmaceuticals? And if so, has there been reasonable return?
Okay. We would, well, the short answer is we have exposure because the first thing we do in equities is to achieve market beta, market exposure at a reasonable cost. And most of the major stock market indices have pharmaceuticals. So we would have exposure to those by virtue of investing in the US and Canada to the extent it has pharmaceutical exposure, and in Europe and so on. So we would have that exposure. I can't tell you off the top of my head whether we're overexposed or overweight or not. So that's the best I can do. We would have exposure through our market exposure. Okay, so we don't specifically have an axe in pharmaceuticals per se.
Thank you very much. Sorry, and just from my previous set of questions, if one of you can just answer with respect to the annual benchmark, how does that compare across your colleagues or competitors?
Sure, I'll take a stab at that. So, we have a portfolio of assets. Each of the portfolios, each of the asset classes has a benchmark. That is a benchmark that is set mostly by our clients, but in negotiation with Aimcode. And so the benchmarks for the most part are pretty standard. So S&P 500 for US stocks, MSCI Global for global stocks, they're pretty standard and used across the industry. So that's the benchmarking question. Every single year, we set targets over and above that. And those targets use information such as what are our clients' expectations in terms of stretch targets, and what does that look like? What does the top quartile manager look like in terms of value add? So we know that the average manager, again, going back to my previous example using CEM, over a 4-year period, first quartile manager typically adds 75 basis points, right? And so our clients have a target of 87 basis points. That's all net of cost. Costs are about 45 or 50 basis points. So every year we go through this process and consider all of these variables, our asset mix, and come up with a target that's approved by our board. And this year it's likely to be 90 basis points net of cost, which is above top quartile. Then from that, our risk team calculates a risk budget. In other words, they set constraints around the investment manager that only allow us enough risk, enough active risk to achieve that and not much more, right? Because you want to contain the manager to the target. And so it's quite a robust and thorough process. And, I think our peers, for the most part, follow some kind of a procedure like that, but it's probably not exact. But that's our process.
Okay, thank you very much. Our final question comes from MLA Grant Hunter.
Thank you, Mr. Chair. And I do also want to thank the public for joining us tonight and for the very thoughtful questions that were asked. I thought they were very informative. My question is about ESG and how that is established. Who establishes the ESG criteria that Aimcode follows? Is there an international body that creates that? And the reason why I asked that question is you had mentioned, Dale, that there are no-goes such as tobacco and weapons of mass destruction. Glad to hear that. But the question that I have is that there are many investment companies in the world right now that are saying that they're not going to invest in oil and gas. And that might fall under the criteria for ESG. And how would you address that issue if that's what they said?
Well, I'll repeat. At this point, we have absolutely no intention of exiting, energy, which is a substantial part of Canada's economy, the benchmarks we invest in, and obviously a much, much needed commodity for decades to come. And we need a stable supply of that. And I think if you look at what's going on in the U.S., where the Americans have had to tap emergency resources because there's such a shortage of hydrocarbons, and if you look at what's happened in Europe recently, where they invested too heavily in renewables, and unfortunately the wind didn't blow and the sun didn't shine, and they had very low inventories of gas and found their gas prices skyrocket. Electricity prices in Europe went up 5-fold compared to what we pay here in Alberta. And that's because of a lack of investment in infrastructure, a lack of capital available to hydrocarbon companies to continue to explore for the decades to come for the resource that's needed. And so I think this has been a sort of a shot across the bow or a warning for folks that the path to a greener future is going to be volatile and very expensive. Amit, do you have anything to add?
No, I think, Dale, you covered it. To the question about the criteria of ESG. So I would simply add that this is a growing area. It's a complex area, and some of the work that we do is around measuring and understanding the exposures to allow us to make better decisions. And as Dale mentioned, to reiterate, there isn't any knee-jerk desire to actually be divesting investments in a short-sighted manner.
Yeah, no, I just wanted to understand who establishes the ESG criteria? Maybe that was my first question, and I went on to a bunch of others, so I apologize.
Well, maybe I'll take a stab at that one. If you look at our ESG approach, it's really got 5 components. There's the structure, there's the investment process, engagements, reporting, and then advocacy and collaboration. So when we look at structure, our Aimcode board of directors, approves our responsible investment policy. We have a responsible investment committee made up of senior executives and consists of our responsible investing team, which sets proxy voting guidelines, asset class sustainability guidelines, engagement guidelines, exclusion guidelines, sets our priorities. One can't do everything within the world of ESG, so we set priorities every year, which might, again, include diversity. Of course, climate change is a big one these days. And then around the pillars of the investment process, I spoke about how each investment is reviewed from an ROI standpoint and rated in terms of a red, yellow, green scale in terms of its ESG cred. There's engagements with our investee companies to encourage them to accept best practices around ESG. Our team engages with portfolio companies, engages with regulators, engages with peers, and we're of course signatories of UNPRI for many, many years, and meet all of the obligations that come with that, including quite an extensive review of our investment process. And I can tell you that our recent results were 12 out of 14 categories A+. Today, our area of one of the areas of focus is around climate change, and today it's mostly involved around helping regulators and standards boards set standards for reporting, so we can at least discover what carbon footprint is and CO2 emissions in our portfolio, because there are no standards. So that's the first step, measure, and then someday perhaps there'll be targets as well. But first step is to set targets. So that's a very robust area of activity among the team now. Amit, do you have something to add?
I'll add one last thing. So to your question around in terms of who sets the criteria, so I'll add that aspect to it. So if you think about equity benchmarks, so TSX, S&P 500, well understood. In the ESG space, the analogous ESG related benchmarks, that is still an evolving space. MSCI has ESG benchmarks, FTSE provides ESG benchmarks, but those standards, unlike S&P 500 or MSCI World, which are almost 99% similar, the ones that the different major index providers have in the market, they are still in an evolutionary stage and similar in certain ways, but still different relative to the more traditional equity bond benchmarks.
We have another email question.
Yes, thank you. This one is from Justin Hughesby from Calgary. How will the investment manager Aimcode ensure that the investment strategy, long-term stable investments, is adhered to? We saw a disconnect with Aimcode and pensions with the legislated monopoly they're afforded in not being responsive to the needs of clients. How will they prevent another Volt misalignment for the Heritage Fund?
Okay, so first of all, the asset mix is set by Treasury Board of Finance. And then Aimco executes on that investment asset mix and tries to add value, add value stretch target within a risk budget. So we have a risk team that independently reviews the portfolio to make sure it's compliant. We have a compliance department that makes sure that it is compliant with the rules and constraints set, on behalf of our clients. And then specific to volts, I think I mentioned earlier that we had an external review by KPMG. There was 10 recommendations leading to 31 different objectives that are all going to be complete by year end, including improved governance, transparency, oversight, new product description and strategy description for every single strategy and product within the organization, with renewed constraints, oversight, transparency, stress testing, and these changes, we're quite confident will put us on the right path to never having the bolts again. That's the objective.
Okay, thank you very much. Seeing no more questions, I will begin wrapping up our meeting. I would like to sincerely thank all of you for participating tonight. I think I can speak on behalf of the entire committee when I say we've enjoyed spending the evening with you and engaging in a conversation about your Alberta Heritage Savings Trust Fund. In turn, we hope that you have found the meeting informative and valuable. There's some really good questions tonight from the MLAs and the public at large, so that was really good to see. To our TV viewers and online viewers, thank you for tuning in tonight. All our questions were emailed. They weren't, I guess no one uses the phone anymore, so it wasn't a teleconference type thing. But anyway, thank you for joining that way. More information about the committee, about this committee and its mandate can be found on the Standing Committee on the Alberta Heritage Savings Trust Fund page on the Legislative Assembly website. The meeting is now adjourned. Thank you very much, everybody.